In this video, I'm going to show you why the 5-minute ORB is absolutely incomplete by itself. It sounds great. Just mark the highs and the low of the first 5 minutes and play the break. Sounds easy. However, many times it's a trap because there's a draw on liquidity. There's a bull trap. There's a bear trap. There's fair value gaps. There's different things that are in play pre-market that you need to take a look at before you just jump on that first 5-minute ORB. Let's take a look at the charts and let's see what we can gather. All right, folks, let's start with today, Tuesday, February 17th. And look, what you see here as we zoom in at open, 8:30 candle was this. Oh, this is the 2-minute. Let me go back to the 1-minute chart. So this red candle right here was the first candle at open. This was the second. Once it broke and it bounced off of the 200 SMA, I got in for a long. As you can see, 2 contracts. Took 125 bucks on one, 142 on my other. And then once it hit this level, I sold 2 contracts. Got 60 bucks on one, 2 micros, and then 139 on the other. Why did I sell this area? Why not think that it's going to go up all day? Well, let's take a look. It's because pre-market, I already knew that there was a draw on liquidity. This was a resistance area. As we take a look, there was a fair value gap right here, right up in here. So I had this marked off. Once it came in there, I was very strongly convinced it would tank. Why? Well, guess what happened? Just last evening, that's what it did. It came up to the top fair value gap, went down all night, right? Pre-market started to move up, started to make its way up. So once we broke right here, it went right into that gap, and it did just like it did last night. It tanked. So what about the people that play the 5-minute open and breakout range? Well, guess what? If you play the 5-minute opening breakout range, you have to just snap 10 or 20 points. You cannot get excited thinking that you're going to catch an all-day trend. Now, if you're willing to just snap 10 points, sometimes 5, then great. It's not always bad, but it's not always great. Because if you're on this 1-minute chart, and you play this open and breakout range, right? This is 1, 2, 3, 4, 5. So you might have got in here. You might have snapped maybe here. This came back down. You might have got 2 points. You know, how would you know that you only got 30 points? Unless you knew about this fair value gap, unless you were ready to snap 30. More than likely, you might have got in here, you probably would have got stopped out for break even. It would have came up, you'd have thought, let's go to the moon, folks. And guess what? You just bought into resistance. I don't like the 5-minute ORB because there's other variables. That's one of them that you have to take a look at. Let's take a look at this. February 12th, this was 8:30 opening candle right here, right? So first 5 minutes, 1, 2, 3, 4, 5. Here's what happened. You would have listened to these gurus online, and you would have said, okay, oh, it broke. Time to buy. And as quick as you got in is as quick as you would have been out. This thing flashed so fast, unless you had a take profit already set for 10 points, you would have got wicked out of this thing, right? You probably would have held. It jumped up again. You might have entered again the second time and thought, oh, look, it's breaking out now. Nope. How about third time? Third time's a charm. Of course it's going to break out. Absolutely not. Negative. Everybody that played the 5-minute ORB got hurt because guess what? They're taught to put their stop way down here. And they got hurt. I didn't get hurt. You know what I did on this trade? I actually have a video of this, so you can go watch it just so you know that I'm telling the truth. It's posted on my... I waited for this fair value gap right here. I actually got 115 points on this trade. Once I saw this fair value gap, I entered for 2 contracts right here. I took my first profit at the swing, at the bottom of the swing, right? After I saw this second fair value gap, I said, oh, this looks beautiful. So I let my runner run all the way to down here. We had news that day. So I kind of pulled it tight. I think I got stopped out right about here or so. And I got about 115 points on that runner. How was I able to not get chopped up, not get suckered for this trap? Because I wait for the fair value gaps. As snipers, we want confirmation. We don't just jump in blindly just because somebody said take the 5-minute ORB. ORB to where? Where's it going? Where's the draw on liquidity? I don't see no fair value gaps up here. Where's it headed to? Where is the liquidity that it wants to get? Nowhere. This was stop raids. Listen, folks, either it's going to take liquidity or it's taking stops, but it's coming. But if it's nothing there to draw it, it's probably just snatching stops because the draw on liquidity was down in Tampa. It went from Minnesota to Tampa, way down here. Probably to fill a fair value gap way down here. So the 5-minute ORB, I'll show you another one. Let's keep taking a look, and you'll see why waiting for the fair value gap is better than just jumping in a quick breakout of the ORB. All right, fellow snipers, now take a look. Again, if you want to get your hand caught in the cookie jar, go ahead and play that ORB. But if you want real confirmation, we wait for the fair value gaps. Let's take a look at February 11th. This is 8:30, this green bar, right? So 1, 2, 3, 4, 5. So what you would have done if you played the ORB, right? You would have marked the high and then you would have marked this low, which is right underneath this doji, right? Okay, guess what? Price came down, probably took your order, right? Probably right around here or so. Maybe here. So were you going to just snap 5 points? Negative. Very few traders snap 5 points, right? You would have held. But you weren't going to put your stop up here. That's 100 points. So more than likely, you would have said, okay, I don't want to risk 100 points. I'll just put my stop right above this bar here, which is 60 points away. That should be enough, right? Negative. Guess what happened? Price came out and stopped you out. See this little stop hunt right here? That little wick says, I came and got your stop. You know what I did? I sat back and waited. Because guess what? No fair value gap, no trade. So what do? We wait for right here. Boom. See this little fair value gap? Bam. You enter here. 1, 2, 3. And your stop is right here. So now you don't have to worry about getting wicked out. Fair value gap says we're going down. And guess what? You just follow the blue line, the 20 SMA. Take me down to the Paradise City, baby. Good 200 points. You see the difference? ORB, you would have been in here, probably got stopped out here. Wait for the first fair value gap. Entry is technically the same. Almost. But guess what? You have less stress, more money. Let's take a look at one more. All right, let's keep the party moving. February 10th. Now, let's take a look. This bar right here, 8:30, it's open, right? Guess what? 1, 2, 3, 4, 5. So you would have placed your breakout from here to here. And on this day, the 5-minute breakout would have worked, right? Bam, great. I would have played it as well. Why? Boom, fair value gap right there. So what are we finding out? That the ORB by itself is incomplete. But an ORB with a fair value gap, take it all day, baby. Take it to the bank. I would have entered right here on this bar. And guess what? We would have got a good, what is this, 100 points or so, maybe 90 points. ORB with a fair value gap. ORB by itself, leave it alone. So if that's the case, I might as well just wait for the fair value gaps then. Why even care about an ORB? Just when the first fair value gap shows up, I'm in. Let's take a look. All right, folks, I'm just looking at any random day. I mean, here's February 6th. So 8:30, 1, 2, 3, 4, 5. Opening breakout range. You would have put the top here, right? And you would have put your bottom here. Well, guess what? It would have worked out for you, great. But guess what's better? The play that I played. Bam! Fair value gap right there. Fair value gap, breaking off or through the 200 SMA, pulls back into the gap. You enter, right? We'd enter right here. So our entry would have been around 8:30. For those who waited for the break of the 5-minute ORB, guess what? Your entries make, what, 900? 70 points higher? I might have took some profit by then. By the time you get in. And then, are you going to put your stop way down here? Negative. Dangerous. Why miss out on all that money? Because now you're scared. ORB, look, it breaks here, you're in it, and that's now the next 2 candles, guess what? It starts to pull back and you're getting nervous. Just take the fair value gap. First fair value gap you see, take it. It's simple. It's easy. And it can save you a whole lot of headaches. I'm going to just, listen, let's take a look at some else random stuff. We might as well just so you know, I'm just finding anything random here. I don't want to really waste your time. That's why I was chopping it up. But, you know, here, let's see what this has here. What we got? This is, here we go. Let's see. What we got? Yeah. What is this? February 5th. Let's take a look. All right. Let's zoom in, folks. The good old ORB breakout. Okay, let's see what we got. Okay. Well, this one might have been a good one. 1, 2, 3, 4, 5. Well, again, fair value gap right there. So, yeah, it's a good one because there's a fair value gap. That's a no-brainer. 1, 2, 3, 4, 5. Yeah, fair value gap. Bam. Just buy right here inside the fair value gap. Let's see if we can find one, folks. Let's see if we can find a good one. A good ORB without a fair value gap. Negative. You won't find them, folks. Maybe one in a million. All right, let's take a look at this one here. January 28th. So what you would have done on the 5-minute ORB, this is the first candle. 1, 2, 3, 4, 5. So your level, you would have marked the low, right? And you would have marked this high. This is your 5-minute ORB. 1, 2, 3, 4, 5, right? Guess what? The first trade you would have took, this one right here. You would have got in for a short, and it would have came and wicked you out unless you wanted to take, you know, those 10 points. Maybe you could have took 15 if you were quick. But that's really all it gave you, folks, from 230 to 220. Now, again, if you just want to snatch 10 points, fine. Play the ORB just to snatch 10 points. But look what happened. If you'd held wanting more, you would have got stopped out. You would have lost 60 points because your stop was here. Then you might have thought, oh, let me play ORB to the upside. And you got wicked out again. You could have got quick 10 points. I highly doubt it. You would have held thinking, oh, I'm going to double out. And it's going to go up. And guess what? Boom. Now you just blew your account. You blew another funded account. You tried to play the ORB this way, breakout. Then you tried to play the 5-minute ORB breakout this way. And you got hurt again. All you had to do was wait for a fair value gap in the right direction. Not this green one, because this green one is underneath the 200 SMA. That's an upside down open. We play green fair value gaps above the 200. We play red fair value gaps that descend below. So this was a no play for the green. It would have had to have been above. So if you played this fair value gap, you got in on this candle down here somewhere, your stop would be above this wick, you'd be good. And, you know, you find another small one that shows up here. So even if you didn't play this one, you're like, okay, I'm looking for red fair value gaps underneath the 200. And there's another one that shows up. Okay, bam. Your stop is right here. You enter here, and guess what? Take me down to the Paradise City. You could have just made, oh my Lord, I don't know how much. A good 100 points at least, right? It's a better trade because once the fair value gaps show up, now you see your momentum. So now you can get in, take some profit here, and then let your runner run. Look at this. All the way down to here. Or keep getting wicked out on that 5-minute ORB. Get faked out here and then get faked out up here without any confirmation of which way the direction is going. The NASDAQ sniper here giving you the game for free. I don't have a Discord. I don't have a course to sell. I don't even have an affiliate link. I just want to help you become effective and efficient to be able to spot all the variables, the 200 SMA, the 20 SMA, the fair value gaps. So now you know where the price is headed and not getting your hand caught in the cookie jar on a stop rate just because some guru said take the ORB breakout. I'm here to help you to not get hurt, to make more money and be more profitable. Thank you. God bless.